All right, so we have an exciting panel here. Oh, thank you. So now, let's see. I'm Dan Lesser, President and CEO of LW Hospitality Advisors.
What if I want to be Quinn? I can't be Quinn.
You got to ask Quinn first.
Chip, how many deals are we closing today?
So
It's early still.
we're not going to do the commercials. We're just going to do name, rank, serial number. I just gave you mine. Chip, why don't we just go down the
Yeah,
line here?
Chip Ohlsson, been in the business about 28 years. I'm the Chief Development Officer at Wyndham Hotels.
Matt Hagler, and I'm the head of business development for Rentyl Hotels, the place, guys, you've never heard of, but it was mentioned a couple times in the last panel. So,
Hi everyone, I'm Jennifer Schrader. I'm the president and co-founder of Caliber. We are based out of Scottsdale, and we're a private equity firm that invests in hospitality and multiple asset classes.
Good afternoon, everybody. Brian Quinn. I am the Chief Development Officer for Sonesta Hotels.
So before we start with the Q&A, just a couple of things. Nobody probably really cares, but this is my first outing. I got on a plane for the first time last night, so yeah, thanks. As I told my partner, I'm really not that anxious to do it again soon. What's really interesting is I'm not going to say where I stayed last night, but I stayed at a branded hotel. It was disgusting. It was dirty. A branded hotel. Kind of shocking when you think about it, right? I mean, it was a problem for the sector pre-COVID, and it's still a problem, and it's kind of unfortunate. All right, enough of that. I'm going to read something that I came across recently that I found very interesting. Just bear with me for a second. It says, in many of our larger cities and also in a considerable number of medium-sized locales, the hotel business has become demoralized as a result of ill-conceived overbuilding programs. Capital, in its continual attempts to find larger returns, has been recklessly poured into hotel structures, and promoters, blinded by misconceived needs of their communities or by the hope that they could advance their private interests, are the two fundamental causes that are responsible for this situation. Regardless of the reason, however, the fact remains that the hotel business as a whole now is suffering from this overproduced condition. So I'm sure everybody's wondering, okay, what's so interesting about that? What is interesting is that this appeared in the August 1930 issue of one of the hotel trade publications, not hotels, but another one. So the only one who smiled was Roger. Okay. You want to laugh? Okay, all right, you get it. All right. All right, enough of me talking. Why don't we, let's talk about the market. Chip,
Yes.
Why don't you, obviously the world has changed, right? It's quite different.
Or the same from 1930, just depends how you look at it.
Exactly, right.
Depends where you're measuring
What's
from.
on your mind these days, and what do you see going forward?
Unlike you, I've been traveling since May. We've been in and out of planes, and I'm very encouraged of what I've seen recently. I think people are taking travel seriously as far as their masks, but I think there's this pent-up frustration of people saying, I need to get out of the house. They used to get out of the house for office. Now they're not going into the office, and now travel. We're seeing some great stats as we move forward here. Our booking days have gone from about 8 days out to about 12 days. And we're continuing to see occupancy levels rise. We ran last week over 60% as a company at the occupancy level. So we're starting to see that turn. And I think as the weather breaks and people can go outside, we're going to see more and more of that. And I'm really encouraged by that because I do think we need to travel. I think we're social beings, and we need to see more of it. We're blessed at Wyndham being in the leisure business and essential travel, or essential business, I should say. So because of that, we haven't seen the big drop down that when they were talking about the St. Regis and a few of the other properties before, right? We've been mainly drive-to markets. And so I think we're going to continue to see that. We're going to see a lot of owners diversify their portfolio and say, I no longer need to be just with this business brand or this business brand, but rather I need to diversify my clientele and start to look at leisure business as a big driver of that, and roadside business.
Great.
Driver of that.
Brian, why don't we jump down to you, and maybe you can also talk about how you see the outlook for the different segments within the lodging space.
Sure, thanks. I would echo a lot of what my friendly competitor said there. I think, And on the real estate and transaction side, I know the bid and the ask, there's still a pretty good spread there. But you did have 2 or 3 big transactions sort of happen recently around the announcement of ESA, Highgate and Colony, Sonesta acquiring RLH, and I think the bottom is in on that side, right? You see the consumer sentiment changing, as Chip alluded to, and you can feel the gears starting to unlock a bit. Our friends in the broker community are saying the same thing. It is a very different cycle than the real estate crash as it relates to the number of assets coming to market and the speed in that regard, and we're probably all a little surprised about the way it played out, but it's definitely loosening up, and that will create business for everybody in this room, and that will marry up with the consumer demand as well. So we have an aspirant view, and we're bullish on continuing to grow this year.
Jennifer, do you want to talk to us a little bit about the transaction market, what you see happening? You're on the principal side, correct?
I am on the principal side. You know, there's definitely a pent-up demand for buying, and I think we all keep hearing about there's this like shadow inventory that exists out there, but we're not really quite seeing it yet. I will say that we have been on the forefront of talking to a lot of our lenders. We have great lending relationships, and we're starting to see some whisperings of maybe we will be releasing some of this inventory. Maybe there's opportunities to partners with lenders to come in and rescue some of the distressed hotels. Although I would say the sentiment on that for me has personally changed in the last 60 days or so. In January, things were not looking so great. March, things are looking fantastic as compared to 60 days ago.
Great, thank you. Matt, you and I had a chance to catch up offline, and you're doing something a little bit different and interesting. Maybe you want to share with the group what you're up to.
Yeah, well, the really interesting part about like what we've heard about a lot from everybody this morning is that there's a bunch of things that are changing and are going to continue to change. And some of them are going to be, at a halo level. So I'm a hotelier that became a developer and have been in the investment space as well. So the one thing that we all have in common is we all love this business, regardless of where we are in this thing. And I was so happy with the last panel that, all the first panels is so important about the money and the capital structure, but we're at the heart of this. We're a creative bunch. And so we really started listening in the last one where we started making the shift to open up and talk about, much more creativity. So I have just joined Rentyl Hotels, and so if you're, we're in Miami. If you're down here, you've probably heard the Falcone name. And Nick Falcone, who's actually here today, founded this company, and for the last 6 years has been doing kind of the back-breaking hard work of creating the full build-out of a technology spine and perfecting distribution networks in the multifamily space to be able to come out and really organize and have that space work. And whether you're that it works for the hotel segment, for people that are investors, people that are start to think about how you can do more things to get great deals done, to get great deals repositioned. And the other really enjoyable thing about the last segment is the family built the Margaritaville in Orlando, which you heard brought up like 3 or 4 times in the last one. And with that thought process and this branded residential resorts, which, like any other ecosystem, when you put together diversity, it ends up being stronger and more robust. So we've got that where we can play with brands. We're doing another incredible concept with the Nicholas Group, where we're creating a club within a club concept, and bringing together where we can go side by side with brands and kind of do like the old BASF commercial. We may not be the guys that you've heard of, but we can make it better.
Thank you. Let's talk about the economics of hotel operations, right? Once the pandemic is fully behind us, and hopefully some other calamity doesn't bubble up all that soon, are stabilized hotel operations going to look different in the future? And if so, how? Chip?
My answer was, I hope so. Look, when I remember in 2007, 2008, there was this downturn. I don't know if you heard about it, this economic downturn that we had. And it was panic for a lot of our companies, right? A lot of the big hotel companies. And about a year later, I was sitting down with one of our CEOs, and we were just having lunch, and he said, you know, we needed this. And I said, what are you talking about? This was a devastating time for our industry. He said, no, it allowed us to clean up our operations. It allowed us to really look at ourselves and say, where are we running fat? What can we do better? How do we provide better hospitality to people? Because at the end of all this, that's what this is about. We're in the hospitality business. And we worry about top line, we worry about bottom line, but we better worry about our guests because they drive both of them. And I think sometimes we forget that. So as we come out of this, we are going to look different, whether it's going to be keyless entries, whether it's going to be self-check-in. What does breakfast look like in the select serve space for the first time, right? We need to relook at that in the economy and mid-scale space and how that works. So I think we'll find more creative ways to drive our bottom line results. But as your experience last night, you can't cut housekeeping, right? I know it's been hard to get people and do that, but you've got to provide a great room for people and do that. So I think we'll find better ways to do what we've always done and more efficient ways to do that.
You're shaking your head, Jennifer. Did you want to add
Yeah,
something
I was
to
just going to echo on that. You know, I think it was probably said earlier in the room today, and we're certainly experiencing that there is an ability to do more with less. So with furloughing staff, with having less staff on space, and with us not knowing when we're going to say get a big airline and crew in one night, we still have to provide the service to the guests. And we've been able to do that by cutting the amenities that we've learned are really just not that important to our guests, and instead focusing on what is important, making sure things are clean, making sure that we have healthy food offerings available. I think that in our experience, turn down service it's antiquated. And nobody really misses that, but they do want a clean room and they do want a good experience.
Yeah, and I think we'll get innovative, Jennifer. I think on that is we'll figure out a way to be more efficient in the room. If it takes 45 minutes to clean a room now, how do we get that number down to 30, to 25? What can we do in that room to make it more efficient?
Matt?
Well, you know, there's other trends that are happening that are going to impact us as an industry. So there's, you know, this thing that I've been tracking for more than a couple of decades that got put on steroids a little bit, where people are making lifestyle choices about where they're going to live. So, you know, so there's been this migration. You know, right now there's people that are dumping out of cities, and people that are re-examining about going, how much office space do we really need to have? So there's a whole change in the way people are deciding what life's going to be, where it's going to be, how it's going to work. I have no idea how, when group business comes back, what exactly that's going to look like. Yeah, it may come back like it was. I don't think it's going to come back like it was. I think there's going to be people making different choices about, companies making different choices about how much office space am I going to carry, what am I going to do at conferences, how am I going to do that different. And so I think with a lot of those things, maintaining the flexibility and really trying to get in front of that's going to be important.
Interesting your comment about people moving out of cities. Up in New York, they're saying now there's a mass migration back into Manhattan, so I don't know who to believe at this point.
Well, yeah, I think it's both. I think there's people moving out, and there's people moving in, like it always happens. But there's definitely, you go around and look around the country now, the real estate markets are all heated up, and we're just seeing lots of people, lots of buyers from urban areas coming in and bringing companies with them.
Brian?
Yeah, Dan, I'll weigh in on both of those a little bit. I think, you know, every crisis, every emergency, you know, innovation is one of the things that comes out the other side of that. You know, sometimes as an industry, we've taken it on the chin by not doing that quick enough. You know, technology has become more expensive. We've got more access to data than we ever have before. I hope we take advantage of it, because I think my colleagues have made great points. This is a time where we could improve the consumer proposition dramatically because of technology and rethinking what services they really do need and where we want to focus, and also use a lot of that same technology and skill and data to improve the profitability for the developers. And if you think about the times when we've had these big jogs up, whether it was, you know, limited service coming in or select service or extended stay, it is when those two things have both been aligned and sort of crossed and allowed us to make a step jump And I think there are a lot of things that we could do at the hotel level that save the operator money and have good perceived value by the owner, and then also just continuing to give them more, more tools. So, at Sonesta, we're trying to be mindful of value and quality, but for both of those constituents, right? Because there is some pressure on the development side. Some folks talked about it around new construction, but the people that have maintained their assets, right? They've been under pressure. And then the consumer, right? We're welcoming them back. So how to get those basket of services correct. And then hopefully, I think in the first panel, let's get back to the guests when they want us for what they want from us. And other than that, sort of leave them alone. I'm guessing everybody in this room doesn't need to be bothered too often, but once in a while you need the services. Freeing up the employees to be able to do that. So I think it's an exciting time, and I kind of sort of can't wait to see where we go with it.
Great. So we all know that there's an awful lot of capital out on the sidelines, chasing not too many opportunities. And there's been lots of talk about, pending bankruptcies, receiverships. Gentleman who I was talking to at the table said to me, I asked him what he does. He said, I'm looking for discounts that are not out there. So here's the question. Are they coming? Is it just a little too early, or is it not happening this time? Chip, you're shaking your head.
Yeah, I actually met with some people last night that informed me it's coming. They're involved in that sector, in that space. I don't think it's going to be a windfall. I don't think you're going to see this huge 30%, 40% discounts. When I talk to some of the people in the brokerage business, they're seeing a 10% discount, 20% discount in the select service space. They're seeing that off of 19 numbers. And I would argue, well, the 19 numbers are overinflated by 10 or 20%, so you're probably at a wash. In the full service side, that's where we're starting to see some things open up. And I think we're going to continue to see that happen. As I don't know if Jennifer that said it or somebody said it earlier about forbearance, right? It's coming due. It wasn't a forgiveness, it was a postponement. And so a lot of people now are saying, wait, I got to pay my interest payment plus what I owed. And they're saying, I don't know if I want to do that on a go-forward basis. So I think some of that you'll start to see open it up. But we saw on the 10X platform 21 deals that we never saw that kind of volume before. So you're starting to see that open up a little bit more. So I think it's coming. I just don't think for the amount of money that's going to be on the sidelines, it's going to put pressure to increase those prices, and you're not going to see the huge discounts.
Jennifer?
Yeah, I would agree with that. I think it would be impossible for it to not come at all. I just don't think that we're going to see the quantity that we maybe thought we would 6 months ago. And I think that the discounts are not going to be as significant because the quantity isn't there. And I think, from what we're seeing, lenders are starting to see occupancy go up, RevPAR is stabilizing a bit. There is no longer this gloom and doom now that the vaccine's out. We're starting to see more travelers. I don't know how many people in this room traveled to Miami today, but the airports were crowded for us. We came in from Arizona. We couldn't get an Uber to the airport. We couldn't get an Uber from the airport. So the travelers are out there. So that just tells me that the lenders are going to be a little bit smarter about maybe delaying some of the forbearances or maybe doing better workouts with the buyers.
It's interesting, in my world, we're actually seeing in some asset classes and markets values today already back at 2019 levels. And what's interesting is that the income is not necessarily back by any means, but it's investor sentiment. And maybe it has something to do with the fact that the sun is higher in the sky at this time of the year, but just in the past couple of weeks, the optimism that has developed in the sector is quite interesting.
I just look around this room and see the optimism. I'm encouraged. I walked in the door this morning and didn't know what to expect. I didn't know if there was going to be 5 people in this room and a bunch of Zoom cameras, or was it going to be full? And to have a full house is just really encouraging.
Well, it's only because they heard you're speaking.
Yeah,
so.
that's what it is.
Why don't we talk a little bit about PIPs, product improvement programs, right? Because we all know that there's been, quite a bit of forbearance, if you will, right? And so maybe, Brian, you can start telling us a little bit about what you see in the PIP world. And Chip, we're going to tag you next.
Yeah, I think like the comment that was made about forbearance, right? Everyone's kicked the can to a certain extent to try and relieve a little bit of the pressure on the owners. You can only do that for a certain period of time before you become irrelevant or you end up having, things in disrepair. So there is a sensitivity. It's always hard to turn that switch on if you think back to the last one, albeit this is dramatically different. I continue to hope that the right lens gets put on that, and if we're going to ask owners to spend money, that they're spending it on the right things. But as the brands feel more and more bullish, and if all the green shoots we're seeing are real and continue to take hold, those PIP requirements will also create trades, which again have the potential for the majority of us in the room to be able to get a new deal done or to be able to work on a project because those trades unlock potential and require support across the business. I do think that the PIPs will be mindful though around hopefully some of the lessons that we've learned, and also trying to leverage the positive reception around cleanliness and safety and some of the other things that have come to bear that have become sort of table stakes issues in the industry. I think a lot of that will continue. So we'll have to build that back in as we get the QA and PIP piece put together.
It's always going to be a high-touch industry. And so, we're having between the service, where people have basically taken down their level of service. And I think this is another thing we heard on the last panel, the people that figure out how to deliver experiences and how to deliver that high touch are going to come through this and are going to be big winners. And that goes for the being mindful about how we do technology as well, so it doesn't become a thing that depersonalizes and commoditizes the experience.
And I think PIPs, look, I think renovations are a balance right now. I have some owners in the full service world that shut down floors and said, what a better time to renovate than right now. All right, I can get the work done, but the lead times to get it, getting contractors right now is a challenge, and they're still expensive. But I think from a branding perspective, what we've done is said, okay, you know what? Let's look at what our requirements are. Do we really need an exterior renovation today? Maybe it's paint as opposed to a new drive-in facade on the entire building. And so we look at it from a mindful perspective of saying, the dollars aren't there to renovate because you didn't have this big cash reserve, so what can we do? And we look at it and say, to Matt's point, I want to provide the best experience for that guest when they walk in the door. When Jennifer talks about cleanliness, I want to make sure that that hotel is clean and we're doing everything we can to maximize their experience so that they come back over and over again. But are they pulling out because they don't see, pulling out of the parking lot because they don't see a certain eyebrow or a certain color code or a certain, the mood boards aren't in the lobby? No. If they're getting a good experience, they're going to come back. And so as a brand, we kind of look at that and say, let's be smart about our approach.
Yeah, Dan, I think on the extended stay segment specifically, you'll see some positive pressure on the PIPs there just because we know that segment held up so well, similar to economy, so it got some more use through the trough. And also the guest service basket there has changed a little bit around sort of work from home and work from vacation and making sure that the technology works and the elements are in the room. So when people want to blend those two events and they're in an extended stay guest room, that all the elements that they want now are in there. So I think there'll be a little bit of pressure on those two segments for sure.
Jennifer, where do you see investment opportunity in the sector?
Oh boy, there's a lot of it. There really is. I think some of it is looking at properties that could be converted into hotels. I think some of it is looking at properties that need to be converted from hotels. And so properties that were underperforming prior to COVID, why do the brain damage to try to get them back to 2019 numbers when the 19 numbers weren't great to begin with? Why not change those into a better asset class and move on to something else? In looking at that, I also think it's important to be really strategic about how these conversions happen. If you're changing a brand, if you're changing an asset class, we all know that supply chain has been massively interrupted. We know that labor's a challenge. I think, we personally went through this in 2012, 2013, coming out of the recession then, and trying to get goods to complete a PIP in time was a nightmare. Right. And so just being strategic and thinking through that to ensure that if we think we have a great investment opportunity, that we think about all the roadblocks that could come with that.
Yeah, and I think one of the things that I like to say during this time is, COVID hasn't killed any hotel, but it's accelerated the death of quite a few of them. And I think that's what we have to realize, that some of these hotels that went back, and I know we looked at forbearance, for the biggest number for forbearance was March. Well, March was really the first month of COVID. So it was people saying, "Phew, this is my out, I can get out of this deal." And I think that's what we were seeing, because PPP and everything else has enabled the good hotels to survive, and they're going to thrive. So I think you're right, Jennifer.
That's an interesting notion. I think the Roosevelt Hotel in Manhattan is sort of the poster child for that phenomenon. I mean, the Pakistanis have owned it for, I think, 20 some odd years now. And I think the intent all along was to redevelop the property, and now it's been announced that it's permanently closed, but we shall see. Matt, short-term rentals, will they have a different look and feel in terms of competing with the hotel sector post-COVID versus pre-COVID?
I don't know how much does COVID matter. So, if you look around the country right now, every place in short-term rental is absolutely killing it. And so but at the same time, in the places like Kiowa or Hammock Beach, the places that are dedicated resorts, they're feeling other pressure because they're losing inventory as real estate markets push up and people don't put into rental, they live there, or that the spread between short-term and long-term starts to shrink. So this idea, again, in the last one we started talking about food and beverage and experience, this idea about doing creative things, this idea about where you're going to see what we're doing, and we're going to come out across the country with this, of putting together a backbone so that you can have a true branded experience, and not in a way that it's going to say that you look at who's traveling, that segment is one of the fastest growing. It's going to continue to be one of the fastest growing. The tech platforms aren't going to stop with trying to get better at it and being disruptive. And so part of this is, in the industry, is being creative about that and figuring out a way to loop that in. So I think that segment's going to do nothing but grow.
Anybody else want to weigh in on that topic?
I will.
Airbnb?
Yeah, for me, I looked at Airbnb last year, and they obviously had a booming year, and I think that a big, huge part of that was because we had to take away all the amenities at the hotel. I know that we personally have never used Airbnb, and we tried it our first time. I hate to admit it, but we did. Tried it our first time last year. It was because we had the ability to go somewhere that had a kitchen that we could bring our dogs with us. And usually we would go to a hotel that was dog-friendly, have a great vacation, but because there were no amenities available to us, that was what we were left with. And the choice was either we don't travel or we do travel, and we have to go outside of the box on how to do that. And I can tell you, I've talked to a handful of people that did the same exact thing. They couldn't fly to their normal destination. They couldn't have their usual stay at their favorite hotel, and so they changed it up for the year. But it doesn't necessarily mean that they're going to continue to do that, because as the hotels are coming back online, as amenities are coming online, as things to do around those hotels are coming online, I think there will be a drive to come back to the hotels. But I think we have to be very sensitive about not going back completely to the old way of things and making sure that we're providing a good value proposition in order to entice those customers to come back.
So,
Go
sorry.
ahead. Go ahead, Matt.
So I want to make sure, because that's so this is where I want to draw a sharp line about about what we're doing is different. We're not a property management company. So if you look at Margaritaville,
Yes.
there's a hotel at Margaritaville, and then there's so it's taking those verticals and go, how do you put those together? So exactly what you're saying. You have the issues of the open platform. You have the issues of what are the standards.
You don't know what you're getting.
You don't know what you're getting. So that's when I talk about the painstaking work of 6 years about setting up all those standards so that you can do the distribution networks, about having it meld so it answers all of those questions, and you can present it as a resort, and it works together with the segment to make it stronger, not tear at fabric.
Ryan?
I think that category of alternative lodging, Cleveland Research calls it that. Everybody measures it a little bit differently, but I agree. I think the takeaway is they're here to stay, right? They're a player to a certain extent. What can we learn from them, right? They've been very accommodating about where people want to book, the channel they want to use, what they're booking on, mobile enabled and those kind of things, and what they want while they're there. Well, that's right in front of us, right? So as the shift, like Jennifer said, the shift goes back to some more traditional stay occasions, we can implement some of that and innovate around those things in order to be more competitive. But that inventory is out there. It's going to continue to be out there. We're going to have to contend with it. And the largest player, Airbnb, is now a public company, so it's got to live up to a different regulatory environment. It's got different pressures. It's got quarterly deliverables and things like that. So they're going to be brought back down to earth a little bit on the innovation side, I think. And then one other layer of the onion, just pulling out a little bit more on the real estate piece, is we're going to have some shakeout. Some hotels may become other asset classes. We've got a client right now that's driving past every bit of retail they can find, waiting for the mall to fall apart, thanks to Amazon. And it's sitting on the corner of it and it with great entrance and departure and exits and all kinds of parking. And so thinking about activating the retail that may change. And I don't think we're going to work from our homes forever, but something has changed, right? So these big, large office buildings are going to tick down a little bit, and that's going to create an opportunity for hotels to be in locations that maybe there's office in. So I think there's a pretty big shakeout if you go up to 100,000 feet across a lot of the asset classes. I mean, resi has held up very well. There's a lot of multifamily in the channel that's coming through. That's going to come through kind of an interesting time in the cycle. But I think there's some opportunity for us in the hospitality space specifically to ride the wave on the way up with these other pieces of either asset classes or locations, pieces of real estate that normally we would drive by because there's something on it to potentially exploit, and could be great hotel locations.
Great. How are we doing time-wise? Anybody know? We're good. We're good? Keep going? Should we take questions or just keep going for now? Anybody, any questions? Richard?
I'm interested in the experience with the government PPP program. You mentioned kind of briefly. I'm really interested for each one of the businesses, those are very different businesses. Were you a recipient of PPP?
Yeah, we were not as a large company. However, our franchisees are small businesses, right? So they're a small business. They needed to survive, and so we have a lot of franchisees that took advantage of the program.
Matt? Do you want to answer that question? No? Yeah. Okay.
Yeah, we were at both our corporate level and then at our hotels. We're unique in that we're a public sponsor of private companies, and so with our private hotel companies, each of those have a separate ownership structure, and so they all had their own individual loans. And I would say the number one thing for those of you who did get those, as you're going through your forgiveness process, if you haven't been through it already, ensure that you're working with your existing lender to make sure that they sign off on it as well, because some lenders are very, very friendly towards it, and some are not, and will try to use it to their advantage.
I'm about 72 hours in at Sonesta, so I cannot directly answer that question, but I know from our franchisees, a couple things. In the American Rescue Plan, I think there's $750 billion in the grants that would, sort of upscale and below would benefit the franchise community. The PPP extension is in there. And then one that I just found out about that's administered by the Small Business Administration, but if the hotel was closed, there's this shuttered venue operational grant program. So if you're trying to restart a business that was closed, there's money allocated to that in the most recent plan. That's kind of a unique one. But if you think about the major metros, that might be able to help people get their gears moving a little bit. And again, administered by the SBA. But as it relates to all that public policy, though, lucky enough to sit on the U.S. Travel and Tourism Board right now, and I would tell you, if you are not involved in U.S. travel or AHLA or AHOA's advocacy, pick one and go help, because it was incredibly difficult to break through and explain the nuances in our business, and that we're an operating business and we don't sell out once, and the differences between multifamily and all that, and the operational impacts and the amount of payroll that we carry and the number of employees. Some of us have had the ability to lobby Congress on behalf of the industry, and the D's and the R's both like us because we pay a ton of taxes, we employ a lot of people, and we have a pathway for appreciating income. So we sort of usually get a pretty good hearing, but this was hit our industry and restaurant terribly, and it took a while to break through and have them understand. But please get involved, because sometimes we're not walking with as big of a stick as we should when we're in there trying to fight to get some of these things solved. But there's some great programs in this most recent bill. And I know in the infrastructure bill, both U.S. Travel and AHLA are trying to make sure we get a fair shot at that slug of money that's coming as well.
I heard recently that there's some employee retention program that if you got PPP, you couldn't do the employee retention, but now that's been changed and you can do both.
Yeah.
I haven't investigated. I don't know if anybody knows about this.
Yeah.
Yeah, I don't know the specifics on it, but I think it was like an 80-20 ratio maybe. So it's been a little bit different this time.
Yeah.
And
so
I'm sorry, just to add on to what you were saying before, most importantly, working with your local officials, with your state officials, there are a number of programs out there that are not publicized. So like we have property in Alaska. The state of Alaska has their own program. We
Right.
didn't happen to qualify for it, but it helped a number of properties up there because their tourism is dead with the loss of cruise ships.
Yeah, and I think you had made the point, talk to your existing lender. They're rewarded for pushing money through their channel, and there's some ups for them, so they want to give it to you if they can, for the most part. Just watch the fees, because they're not supposed to be hitting you guys too hard with the fees.
Great. Yes, sir.
You know, along this government assistance line, and I think Brian might have mentioned it, in the new bill, I understand that there's going to be provisions for tax credit for employers, taking it to 100%, and it's a full credit rather than an expense deduction, so 100% credit on travel, and then for individuals, up to $1,500 of credit, and then some additional kids for travel expenditures over the coming years. I know HLA was working on that, but do you have any sense of that? That's a massive government assistance program, would be a huge tailwind, I think, for the industry.
Yeah, I know some of that made it in the American Rescue Plan, and that CHIP and U.S. Travel specifically are pushing to make sure on the infrastructure bill some more of those things are solved. But really, talk to your banker, talk to your attorney, and the SBA is where a lot of this is administered, even though it is very different than normal SBA requirements, right? This is way outside of a normal SBA loan, but they had the architecture to be able to help people through the process. And I think you are correct. They did, some of it became a grant instead of a loan, and the forgiveness calibration changed over time. And some of it was direct, that granting almost, to be able to action the money with a lot more freedom for the operator. And then in the tax bill also, there's some expensing around T&E, which had gone away for a long time, but that helps a little bit. One headwind that we got to be mindful of is just gas prices have ticked up a little bit. They've moderated the last 5 or 10 days, but for a minute they were sort of headed in the wrong direction, and a lot of the travel is going to be by car in the beginning. And last thing on this topic for me is just as soon as we can get the international borders open, that will help the big cities, and Mexico and Canada are about 50% of the inbound travel, just those two countries into the U.S. So I know we've got to get shots in arms, and I've got one in me already, but we've got to get the border open if we're going to get the major markets back.
Do we have any other questions? Yes, sir.
Somewhat related. I'm curious to know if you guys think there's going to be a lot of consolidation we're going to begin to see as a result of, sort of properties running down to the end of their financing, things along those lines. Are you going to see more of these big firms sort of gobbling up and consolidating the industry overall? And 3 years has, 5 big players similar to the casino industry looking back several years as opposed to the way it is today with a lot of independent operators.
I don't know that we'll get quite to that low of a number, but I think that we will lose some of the smaller ones. And reasoning for that is financing so challenging right now. A lot of the lenders that we're seeing don't quite know what to do with the onesie-twosie or the smaller deals. And so they have a much easier time writing a large portfolio loan. They have an easier time underwriting it. And so I think that's where we'll start seeing the bigger firms coming in and eating up the little ones.
Yeah, I agree. I don't think that slows down, or I think it actually picks up as we go through here. When we talked earlier about bottom line and top line, right? It's getting tougher and tougher out there to figure it out, and you need sometimes a big firm to come in and use their strength and their size to help negotiate better rates, to get you better procurement, to drive more business into there. It's expensive to get group sales and to drive that in this market, right? There's not going to be a ton of group sales out there. So how are you going to do that? Well, you need a full staff out there to know everything that's going on out there. And so I think that's where you're going to see some of it.
We have just a couple more minutes. Do we have any other questions? Okay. I'd like to go down the line and,
Dan, there's a
I'm
question
sorry.
here. Question here.
Yes, sir.
I think we've spoken a lot about the U.S. as a whole, but do you guys see any specific markets, areas within the U.S. that we should be paying close attention to? We all know Miami's booming right now.
That was my last question.
Things are busy there too, so I think there's some that are gonna come out quicker than others, some regions, states. What do you guys think we should be paying attention to?
I'm going with Pigeon Forge and Gatlinburg because I heard about that today.
So actually, that was going to be my last question, so thank you for teeing that up. So why don't we go down the line and answer that question, but also, talk about hotel property type that you like, right? And I'm going to start off by saying that at the right basis, I really, really like New York. I did say New York. And I like big box properties. Chip? At the right basis.
Well, that's a different take.
At the right basis.
I didn't see that one coming. Look, we're in drive-to destinations. I think you're going to see that for a while, and everybody's talking about when do the big box come back, when do the big meetings come back. I am not as pessimistic. I'm in development, so we're never pessimistic, but I am not as pessimistic on that because I do think that offices are going to shrink, but I think there's going to be a need to get together regionally. And I think you're going to start to see some regional meetings take up some of that hotel space. You're going to see people getting together, not in the office, but get together outside of the office because the office is going to be smaller from what it was. But I'm very bullish on the mid-market. I think that is an insulated area. If the economy ever drops, we get the traveler on the upscale drops down. When the economy booms, you get that economy traveler to jump up. I think we're still going to see a lot of building in that because building costs right now are insane. Lumber's gone up 3 times in the past 18, or 3 times what it was in the past 18 months. So I think we're going to continue to see some development in that mid-market space and drive-to destinations because I do think Gatlinburg and Pigeon Forge, and I was kidding about it, but those markets have blown up. Anything near a beach has blown up. Anything near a mountain has blown up, right? It's people saying, I need to get out of the house, but I want to be outdoors. And I think those markets continue to impress.
Matt?
Okay, for the near term, drive markets, resort segment, and where you have diversified offerings and experiences and across the gamut.
Jennifer?
Well, it's always hard to go second to last, but I think anything is a good buy for the right basis. And so there's markets that I may not personally love, but for the right price, we'll buy in them. We do have our eyes on the Southwest, on Texas, on Florida, just like everyone else, but it's pricey. Labor's pricey, construction's pricey, it's hard to get materials. And so in terms of type of hotels, I think lifestyle is going to continue to grow, and it speaks to the consumer wanting to have that unique, special experience, and I think mid-market.
Thank you. Last but not least,
Thanks, Jennifer. Second to last. We're making a big bet on extended stay. We've got 3 products in that space, 2 with the Sonesta branding and then guest house. We think that segment has shown resiliency through the crisis here and will continue to be important going forward. Economy also has shown some resiliency and is a lower cost entry point. I do think, though, when everybody's looking this way, somebody's going to find some great discounts, looking the other way. So repositionings and the opportunity, all the segments will heal. It's just at what rate and where they're located. I think the major urban centers that are not drivable or historically have not been considered drive markets are just going to be tough till we get the air travel and cross-border thing sorted out. But I do think if everybody's looking this way, there may be a few discounts that way. So keep your eye on both. But I would say extended stay. Yeah,
and Brian, to your point, I think what everybody needs to remember is this wasn't a breakdown in economics that caused this. It was a black swan event. That's what we have right now. It's going to change travel patterns, so be smart. And the people that figure out the new travel patterns and how people are going to travel for the near future are going to make a lot of money.
Terrific. Well, thank you very much, everybody.